Welcome to another segment of the Smart Business Entrepreneurship Conference 2024. At this time, I would like to introduce the former Managing Director of Scotia Bank, Trinidad and Tobago, and the current Chairman of the International Financial Center of Trinidad and Tobago, Mr. Richard Young. Welcome, Mr. Young.
Pleasure.
All right, thank you.
Not at all.
For taking time out from your busy schedule to be with us today. I know time is of the essence, so I would like to ask some brief but pertinent questions. I believe that would be of value to our audience. All right, so just to kick things off, can you share with the audience some of the steps or the road map that you may have taken before banking? Tell us a little bit about Richard before your tenure at the bank.
Okay. Well, Kieran, thanks for having me. I am now 74.
Wow.
So when I realized when I was 16, 17, so that would have been in 1966, because I was born in 1950, I wanted to be a chartered accountant. And at the time, you could have studied accounting in Trinidad, and you didn't have to go to the UK. Of course, we were sort of very British at the time. And you didn't need A-levels. You could just have O-levels, and then you could do the exams at ACCA. So at 17, much to the chagrin of my parents, I left St. Mary's, and I was fortunate to join the firm of Pricewaterhouse. It was then Pricewaterhouse. And worked and studied. And then 2 years later, the government at the time, still the government, under the PNM administration, I guess, Dr. Eric Williams, granted me a scholarship. And I was off to the UK. And 2 years later, I was qualified. So it took me 4 years. So I qualified at the age of 21.
Okay.
And then I did a little bit of service for the government because of the scholarship. And then I rejoined Pricewaterhouse. When I was then about 22, 23 to be more precise. And then I just worked hard, very focused. And then I was admitted into partnership when I was 41, which is a very, very, very young age. Within a matter of 6 years of joining the firm. And then I was a partner there for about 11 years. I was then, I was a partner at 28, my apologies. So long ago. But at 41, 42, I realized that retirement was 55, which would have meant another 15, 16 years. And I felt that one of the things that I had missed in life was that I kind of, I did my studies in England, attending a polytechnic as a kind of a matured student. So I never experienced the living on campus life. And I wanted to go and do an MBA. So I then said to my partners, why don't you give me a sabbatical? Give me a year off. Let me take my family. I then had 3 children to go off. I was thinking, of course, in somewhere in the US or UK to go and do my MBA. But it just wasn't practical. I was looking after some of the firm's biggest clients. So to take a year off, that sabbatical was difficult. So, at about 44, 45, I was kind of looking, a little uneasy, uncomfortable, thinking that it would be so long. So I could now understand when they tell me young people don't have a career span of more than 5 to 8 years. Because even then I was after 11 years as a partner. And, this firm who I looked after kept asking me to find them a CEO. I furnished them with a series of names. But of course they had an ulterior motive. They were really headhunting me. So every name I gave them, that person wasn't good enough.
Right.
And then they popped the question, why don't you join us?
Okay.
So I then, after a long time, I give this story, I must have ran, I used to do a lot of running then, I must have ran about 400 or 500 miles, not in one go, of course, thinking about it, down in Chagaramas, because I was then into, a little bit of running. And eventually they said, look, I will go and join this firm. It was an insurance company, a general insurance company. And I joined, and with the succession plan, took it over a year later, and ran it quite successfully. The Lord was with me, no big storms, no hurricanes. It was spread throughout the Caribbean, but yet, we were fortunate that we didn't have any major hurricanes. And so it was quite successful. And then the story was that Scotiabank had approached me to come and serve on their board as a director whilst working in this insurance company.
Okay.
Never heard from them for quite some time. And then, ironically, a director who, in fact, ran the same insurance company was retiring from Royal Bank. And Royal Bank also called me and said, why don't you come and join our board? To which I accepted, because I had known Royal Bank very much. I was a kind of what we call second partner when I was at Pricewaterhouse. I wasn't the main audit partner. So I accepted the appointment. And to be honest with you, I give this story. I went and I sat in a photographer, took pictures and all that kind of stuff for the annual report. And then the story goes, Scotiabank suddenly realized what was happening. And I guess they didn't want to lose me. I don't know. So they came back and they said, look, we just don't want you to be a director. We want you to run the bank.
Wow.
So there's a question of running a bank or being a director of a bank. Competitors. And again, after a little bit of thinking, I accepted the Scotiabank offer. I had, of course, visit head office in Toronto to be interviewed, etc. And I then, having made the decision, I had to go back to Royal Bank and say to them, listen, I'm so sorry that I'm going to be competing with you, having accepted. And the story goes where that same day I went to see Peter Julie, was the guy then. Peter had in fact said to me he had just given the approval to print the financial statements, the accounts. And it would be my picture in there as a new director. It would have been most embarrassing.
Yes.
So they had to cancel it, right? And then, of course, I joined Scotiabank, and, I don't say the rest is history. I spent about 13, 14 years with Scotiabank. It was a really great experience. You learned a lot. I think banking, what I learned at Scotiabank was, understanding process, managing over 1,000 people.
Okay.
As a CEO, you spend more time dealing with people issues than the pure banking. But of course, you had to deal with clients at the same time. Okay. And one of the values that I've always tried to push is that I always attempted. In those days, they had just introduced voicemail on the phone. And people weren't responding to voicemail as fast. But as a personal thing, I would ensure before the day is done, I have returned all my voicemails. Right. And in fact, when I called people at 6 and 7 in the evening, they were confused. They say, well, calling me? Well, how you calling me? I didn't expect to hear from you. This kind of thing. So, it's a kind of a customer service driven kind of...
Customer centric.
Right. And that did wonders. People began, the customers felt, well, if the CEO could do this thing, of course it puts a little pressure on the staff that they themselves have to return the voicemail, right? And so I, ran Scotiabank for about 12 years, 13 years. And then in 2000, it's so long ago, 2012, because at Scotia you had to retire at 63. Right. So I was approaching 63. And then we found a successor. And, having a long period of transition is never good in leadership, right? It creates a lot of overlap. And so, I took off a little before 63. And it has really been great. I mean, and then in that other phase of life, after retirement from Scotia, I was fortunate to serve on 2 public company boards. All right,
just to interject before we go to that period.
Okay, sorry, right? I've talking too much.
No, that's fine. I'm sure the audience is enjoying it. What I would like to find out though is the period, or what you would have found the major difference from working with a very established accounting firm, PricewaterhouseCoopers, auditing and so on, into the insurance, into banking.
Yeah.
That's like the perfect tree in terms of finance. You probably add 4 the credit union side of things if you wish, but insurance, banking, accounting / auditing.
Yeah.
how would you describe the difference in each and the major lessons learned during those that time?
Yeah, that's a great question. I think the common thread throughout those is financial services, right? With the emphasis on services.
Right.
You know, whether it's an accounting or auditing, services, right? Whether it was insurance, it was always services, servicing the insured. And then, of course, banking and natural,
Okay.
right?
Okay.
Never got too involved in the credit union side,
Okay.
although I tried one or two initiatives when I was in the bank, you know, to build some strategic relationship with credit unions because they have a massive customer base,
Correct.
all right? So the commonality really is that, you know, you have to have that desire to serve. Right? I mean, right now you have this impasse going on with auditing, with the Auditor General. And I think if there was a little more service-oriented, we may not have had that impasse.
Okay.
I don't know. I don't have all the details. You know, and at the same time, some people feel services could be subservient, and that is not so. Services must have a balance that in auditing, when the accounting profession, you have to maintain independence. But I honestly believe you can serve and still be independent. Right?
Okay.
Insurance was a different one where people were seeking a service from you, i.e. to give them cover, right? That if there's any catastrophe or claim or loss, you can cough up the funds fairly quickly without any kind of hassle. And of course, going into an industry where there's always that kind of thing with insurance where people always believe you take the premium very quickly. And when it comes to pay a claim, it's difficult. Well, the company I ran had a brilliant reputation, you know, created by the forefathers, so to speak, the people who I inherited the business from, where the premium was a little higher, but again, it was service-oriented. And even if they had to lose on a claim, they settled it quickly, right?
Okay.
They understood the dilemma that when you have suffered a loss, particularly if it's a catastrophe, you know, what you want to do is to get back on your feet as quick as you can. And don't get yourself bogged down in the details and, you know, legal stuff. Now, the world has changed somewhat, You know, I mean, even in my time, I used to hear people talk about, well, it's just a handshake. But, you know, sometimes today it's not just a handshake. Again, it was service. It was a desire to serve people, right? And then, of course, banking was a natural. You know, I always make people, you know, make the point that when someone applies for a loan, they are really in a very precarious situation because they're in a period of unknown. Will I get the loan? Will I be successful? And it makes them feel very insecure, vulnerable, so to speak, right? And as a banker, you have to prevent that. Whether it's an individual loan, what they call retail, or whether if it's commercial, then you're applying to start your business or you need extra funds to augment the business. You know, so service is the critical thing.
Good question to ask, as you mentioned the loan aspect, right? But I still want to go back because you mentioned customer-centric, different tenures. In terms of the loans, right? What are your thoughts in terms of, you know, the requirements that some of the banks have, the approval process? Some persons say, you know, the banks would lend to who they want to lend to. They would write off debt to who they want to write off debt to. How friendly is our local banking system towards SMEs and if you have any recommendations? Well,
I would like to come on to that at my later stage in life at the TTIFC with SMEs, but broadly, it is difficult. But I want you to understand, Kieran, this point. A bank operates by getting deposits and savings from people, right? They are a custodian of those funds. You have to ensure as a banker, you know, particularly at the top level, that your policies and your processes ensure the safety of those funds, right? You can't just willy-nilly just lend out the funds because it has to be recovered. You have to have sufficient. Yes, there are guidelines imposed by the regulators, the central bank, but still, you know, you could suddenly get up and find a whole set of loan losses or delinquent loans, and then you're in trouble.
Okay.
And once you get in trouble, there's a whole aspect of reputation. People begin to panic and they withdraw their money. And we've had cases like that in Trinidad, where we've had 3 banks failed, right? Now they've formed themselves together to a good, formidable bank. So, you've had finance companies where even the chairman said, your funds are safe on television. And the next day, there were queues outside the organization ready to withdraw their money, right? So it is not as simple as saying that the banks are tight. The banks have a fiduciary responsibility to look after depositors' funds and save, people who save.
Okay.
So they have to ensure when they lend, it makes sense.
Okay.
Where sometimes there's a little gap is that perhaps the banks, because they're conservative by nature, because of what I've just described, may not understand the business as well, and could be a little more risk-taking, and then you find that credit might be more easily available.
Okay.
On the other side, we have to also appreciate that lots of people apply for loans, whether it's on a retail side again, or on a commercial or SME. They don't have their documentation properly done because it probably costs money. You have to go and hire an accountant or something to put your business plan together. I mean, there are lots of people who have great ideas, but to drill long into details as to how it will be executed, to capture that in a business plan is not as easy, right? So if it's first of all, it's a document that you present to the bankers, it has to be a document that is convincing. And if it's not convincing, I think it's not fair to say the banker should just give you the funds. Okay. They're custodians and they have a fiduciary responsibility. I think what has to happen is that we have to, as a country, have a process and an enabling environment to bridge that gap. And I say enabling not to mean that SMEs must be able to just access funds, particularly like through the state, and feel that they don't have to pay back. That's another story you could go on for ages, right? There's that feeling that you have to give me the funds because they're state. I mean, at the same time, the state funding, all of us, the taxpayers. Right?
To interject, when you look at some of the initiatives from the government, we look at right now the SME, in terms of the government standing security, 80%.
Yes.
For SMEs in the market, and working with the local banks to achieve funding, working capital for SMEs. What are your thoughts on that particular initiative?
I think it's a brilliant concept. But again, people must not think that because the state has guaranteed it, they could just give the loan. A banker's primary responsibility in situations like that is to ensure that this application, this business makes sense. Right? It has the capability and it will implement and execute to generate funds to repay the loan. Not because it's guaranteed by the state. You could just give it. And I'm sure in certain loan agreements with the state, they probably have that requirement. Right? So it shouldn't be any different because it's state or private. Right? It has to go through that kind of rigor to think. But please go ahead.
That's fine. And in terms of now, because I see you may have on the CEO hat from the banking side, which is great. So audience is able to see from the perspective of the banker, right? What would you say, what would you recommend now to the business owner, whether established corporate looking for working capital or the startup entrepreneur, 2, 3, 5 years running, have finances, working with the bank? What do you suggest are the key things that the business should have in order for the banks to at least give them a fair shot?
Well, I would say, first of all, you have to have a business that makes sense. Not because you like it, it will be successful. Right? It has to be something that the market or your customer base will respond to by wanting to buy your product or get your service. Right? Not just because you like it, it will happen. So you have to ensure that is there.
The viability, I guess. Viable.
Right. Or it's marketable. There's a market for it.
Okay.
Right? And then at the same time, you have to be able to get down in a little bit of granular detail as to how you will make it happen.
Okay.
Right? And it was the execution and the implementation of it.
Okay.
Because again, it's easy to say, they always say, you could have the best strategy, but the winner is the one who has the ability to implement. Right?
The execution.
Exactly. So you have to have that capability at the same time. Right? And then, it's something that perhaps because of my accounting background and training, I naturally have an eye for detail, sometimes too paranoid. But you have to, as a business owner, keep eye on details too. Right? Otherwise, the shop will walk out and you don't know. Not in dishonest ways of observing, ask yourself, ask questions, and be a little granular in that. Okay? There is that. And then, of course, depending on your business model, the marketing of it, as I mentioned earlier, is crucial. Winning the confidence, customer service, customer driven. Many people deal with you because you're so customer centric. Right? And at the same time, if you are depending on people, and most businesses do, as they say, that's an unrecorded asset on your balance sheet. The human resource. Right? You have to have that ability to motivate, keep people together, have that common vision, get them all excited, that they want to do it. And it's not just a job. Right? To me, building a team is crucial because you can't execute it on your own.
To add to that, right, from an entrepreneurial standpoint, startup, from being a CEO, it may not be as big an organization with 4,000, 1,000, 2,000 employees, right? Maybe a team under 100 or so. And what the observation for me is that the CEO sets the culture, especially in the smaller enterprise. So even if you're not feeling positive, you're not feeling as strong, not every day you may feel the same way, right? But whatever that feeling is, that drive, your employees feel it.
Of course.
Right? So how would you describe, being a young executive at Price Waterhouse into senior executive at the insurance, and then managing a bank of that stature in terms of driving culture and bringing your personal drive into those organizations?
You bang on there, Kieran. In fact, I wanted to go back. I tell people when I ran that insurance company, that was my MBA in practice. Right? Because at Price Waterhouse, you had a small team that varied from assignment to assignment. But the thing with that is that everybody were budding professionals. So they were all driven to do the job, focus on it. When you get into insurance, it was people who were working there as a way of life. Right? And then on a bigger scale, the bank, right? The thing is that as a CEO, as a leader, you have to have, you're right, about setting the culture, but to do that, you have to have energy. Right? If you don't have that energy, it doesn't have to be a razzandazz, but you have to be focused, you have to be precise, and as I said, you have to be able to communicate and motivate. And those are the kind of things that they talk about as a leader that you need, whether it's a 10-man shop, 100, 1,000. Right? Culture is critical. Right? Culture, particularly if you are, is in a sense is easier if you're setting up a startup business because there's no culture. It's a new business. So you could set the tone. Right? And setting culture touches things like values, critical with values and behavior. To me, as a leader, you have to walk the talk. You cannot say something and do something different. The people who follow you, your staff, they will see through. Right? And you will never be able to you have to be open and honest with them, and as I say, walk the talk. Because they're going to test you. Right? And if you don't walk the talk, it's just like my case of when I say, I would ensure I return all my voicemail by the end of the day. Because if the boss man doing it, you better do it. In that broad sense, right? So having energy and focus and really getting a culture. So my point was, In a startup, you have the luxury of setting your culture, right?
Yeah.
And when I talk about culture, I'm talking about commitment, meeting deadlines, punctuality.
Yeah.
Well, honesty and integrity is understood, right?
Yeah.
You can't just say, well, I'm going to do it. You see, one of the things, there's all saying about, the word assume what it means, right? In a sense, it's not being distrusting or not believing, but sometimes you can't assume everything. You got to go and kick the tires once in a while, regardless of the level you are. You kick the tires in different ways, right? And just don't assume that everything is okay. So that, that whole kind of drive is needed. So if you join an organization that already has this culture, in my mind, if you join a successful organization, it's more challenging because the people who are there feel the culture is good, is correct, so why we want to change it? Mm-hmm. If you join an organization, I have not had that experience, but if you join a fledgling or failing organization, it's easier because you're about it because the culture, the existing culture has not been successful. So you have a kind of a right, I would say, to change the culture, to get it to be a winning culture. So joining a successful organization, which is what I experienced in life, it was difficult, right? Because, and in a sense, it's like the country. People complain and so on, but we're still well off compared to other countries. So people don't want to change. People want to maintain status quo. They want to maintain status quo for various reasons. They're comfortable. They might be benefiting because of the status quo, right? And if you change things, like if you wanted to digitalize things, all of a sudden they feel uneasy. They have been doing this part, and now with the technology, that thing that they're doing is probably no longer required. They feel threatened. So, the communication and the managing of change is more difficult. But culture, you're right, that is the kind of glue, as a former CEO said, in a way, as talking about, culture beats strategy, right? Just like implementation beats strategy, you have to implement. You have to have a culture that, because people have to be motivated. So, startups, as it relates to culture, is easier in that you could set the tone. Joining a successful company is a little more difficult because people are reluctant to change the culture because they figure they have a winning culture. What they may not understand is that the industry they're in will change. And as we've seen more recently, you have disruptors in the business using technology, for example. And if you don't get yourself ready, you get disrupted and you're no longer a winning company.
Correct.
Right? And if you join a fledgling company, in a sense, you have free rein to install a culture.
So as you manage, as you mentioned, the disruption.
Yes.
It's amazing because I think we would have gone back to 2012 or even at that time when we were exploring mobile payments, different e-commerce solutions. I mean, that is a whole story by itself that once we have the time, we could share more information on how far back in terms of your passion for that, in terms of banking. So moving on to the IFC, which is also managing a lot of disruption, but also collaboration with established financial players, tech companies, Fintech, BPO, business process outsourcing, etc. Talk to us about the IFC, the International Financial Center of Trinidad and Tobago.
Sure. Kieran, I can't miss the opportunity. I mean, I want your viewers and the audience to understand that in 2012, when I was about to retire from Scotiabank, you found me, right? You called me up and said, come and join me. And I guess I wanted to, I didn't. And I kind of regret it sometimes. So I'm so happy to see 12 years later how you have grown, right? As you say, we could talk about it another time. But I don't know how you found me. I never really asked you. You kind of say, well, I look around and I figure you're the man, but we'll talk about that.
We are in tech, so once you're in tech,
Right, but I wasn't in tech. I was running a bank. The TTIFC has gone through different models. But back in 21, I had, become the non-exec chairman in sort of, the latter part of 2015. So in 21, we had our mandates changed to three things. One was to get as many government ministries, departments, and agencies capable of handling their payments in a digital fashion, right? And in these cases, it was more about receiving the monies, the services that the public have to pay for, has traditionally always been by cash, right? And the whole handling of that. And so digital payments was one. There are the MDT and iGov who play in that aspect. They've been playing in it much longer than us. But we took a very simple approach by saying, look, there's an infrastructure of cards. Let's use cards as the basis. But on top of that, we were able to work with Treasury and introduce an electronic cash book, as we call it, that accounted for the funds automatically once received electronically. So it's not manual, right? So we have what we call it the e-cash book. That is something that nobody else has. So we've provided comfort to Treasury, and by extension, of course, our line minister, the finance minister, that when we collect the money, it automatically been accounted for. It's not manual receipt put in a vault, and you don't know how longer when it takes the deposit, right? Because it's digital, it's going in straight away, whether it's a debit card or credit card. So that we still continue to do. We have that e-cash book that is really the only one that exists. That certainly the Auditor General will be happy with it because they looked at it also in the context of the process. But the big one that we really have, and then the third one is financial inclusion. Financial inclusion is fundamentally about bringing people and small businesses, SMEs, into the banking system. And we did a survey last year, and in a couple of weeks' time, I'm just working with our line minister to get the go-ahead to launch the results. But some of it is already out. Our inclusion ratio, in other words, people who have bank accounts, have dropped from 81% to 75% in the last 6 years. Our survey gives us a lot of reasons as to why. And of those 75, how many of them are really using their bank account? And then, of course, the other 25 who don't have a bank account. And what's the reason? Right? So we have those results. We've analyzed it. We surveyed 2,000 households. And as I told my Tobago colleague, 200 of them, 10% is a Tobago sample.
Right.
And the other 18 fundamentally through the other 14 regional corporations. So we have those results. And on top of that, since December of last year to just recently, we collaborated, as you were saying, with a lot of stakeholders. What are the things we need with the central bank, the FIU, NGOs, small businesses? What is required to bring these people into the system so that they themselves could be included and by extension improve their lives?
Okay.
Right? For example, a large chunk of MSMEs, small businesses, deal in cash. And on top of that, they don't have a bank account for the business. So what the bankers say, they commingle. And that's a disaster. Right? You should never commingle your personal funds with the business funds because you already don't know, in a sense, how your cash flow is going and you get it confused. And you will be spending more than you're earning. Right? But when you ask, well, what has happened? Back to the same question that the documentation requirements from the bank to open a bank account, it's very, very taxing.
Yeah.
One or two banks have, been more relaxed now, but we want to we've had a dialogue. We had the CEOs in at the end of April, had a long, shared some results with them, in a collaborative manner. How can we work together? Because they themselves want their customers to have more financial services, right? I can remember when online shopping first came on, people wanted a credit card, but they have no credit history. because you don't have a bank account, or your bank account is in and out. You open a bank account because your employer says, you need a bank account for me to pay you, right? And because of perhaps the bank charges, you take out the money one time and you live in cash. Cash is king in Trinidad right now, over and above the safety aspect. So one of the benefits of using a bank services or other financial institutions is that you create yourself a credit history. And that will give you the rights to get, even as a small credit card, you could do all the shopping online if you wanted.
Just that.
Yeah, subject to the foreign exchange availability. So, and then as I said, the MSMEs who do not have the commingling, so we have to fix that. And at the same time, the method of collecting is all manual. They don't have a digital manner, a point-of-sale machine, or things like that. So we have to move towards that. We recognize, and I make this point very clear, and I know I've digressed, I've just given you the mandate, that there are people who are terrified to go digital, because the more mature citizens kind of afraid technology, but I tell you, they're using WhatsApp to talk to their children and their grands away. So we have to have a mechanism working with the central bank, not just financial literacy, but financial, digital literacy to get them comfortable.
Okay, great.
Right? We'll obviously reach out to TAP and those people to bring them in, to show them, it's secured. And then the third one, so we have digital payments, financial inclusion, but the one that kind of glues it together is trying to create a fintech sector. Right? Because as you know, Kieran, financial technology, or fintech as it's called, is a mechanism by which you could render financial services, I'm not preaching technology, but at a much lower cost.
Right.
Of course, the market size is always a challenge. So in fact, it was the TTIFC back in 2 or 3 years ago when we took the EMI issue order that was there on the minister's desk that the central bank had drafted, got it all tidied up, as we say, dusted it, and got the minister to sign it. And that set the stage, so we have 3 or 4 e-money issuers, and a couple more applying. But fintech as a general thing, whether it is payments through a QR code and stuff like that, we've been fortunate to be working with the United Nations Capital Development Fund, that gave us some funding to create one fintech avenue, which is an innovation center, to facilitate fintech players. And that's where we'll use that platform. We've had a couple of sessions about how you apply to the bank for a loan, how do you get capital, those kind of things. So in a sense, I've kind of gone to the other side of banking now, and trying to help facilitate.
Understood.
Right?
So that's excellent. I mean, I think our audience cannot ask for more. We touch on the auditing, financials, the banking, insurance, trying to raise capital, culture from a CEO standpoint, being that driving force, that positive energy, that coach within the organization. In closing, can you give a word of encouragement to the private sector, being that experience, as we navigate this global marketplace, the ups and downs, and a word of encouragement from a leadership standpoint, seeing that you're in public sector service as well, in terms of the initiatives of the IFC, in terms of leadership?
Sure. I think, as we were chatting earlier, there is a difference when you lead a private organization as against when you lead a public organization. The accountability, whilst it's fundamentally the same, I think for a public company, you have to clearly understand that the funds that you are responsible for belong to the citizens of Trinidad and Tobago, right? So you have to really manage this tighter, right? And because of the cynicism in our society, there is always the issue of 4 or 5 years later, what have you done, and stuff like that. So you always have to bear that in mind. But the critical thing is that the funds belong to the citizens of Trinidad and Tobago, and you have you have to give that priority to manage it,
Okay.
right? You have to understand that in private sector is a little different. You might be a little more flexible. But one of the things that it slipped me to say, Kieran, and you had hinted on it earlier, I think in any leadership position, having a strong supporting family infrastructure is critical. Whether it's through your spouse, your children, or whatever, you always need that. So family life, as you know, which is absent in many times and has caused some of the challenges that we have. To me, that's critical, having that. But, it's people say, regardless if public or private, it's all the same. I would say, as a leader in the public sector, you have to be a little more conscious and a little more aware, right? And, this might sound to be heresy, but I think accountability in the public sector should be much greater than the private sector. I mean, it's, right now, people debate it, right? Because I keep saying that the funds it doesn't belong to you, it doesn't belong to a certain sector of people, it belongs to the citizen of Trinidad and Tobago.
Correct. Okay.
So.
Excellent. So audience, I wanted to go more into the Security and Exchange Commission, stock exchange. So for another date and time, maybe we could get those insights from Richard with his experience. So I would like to thank you again, Richard, for joining us. I mean, I know you can cover A to Z in the financial services. So it's truly a blessing for you to be with us today. And I want to thank you again for joining us.
It has been my pleasure.
Thank you.
Well done.